Company fundamental basics. Fundamentally not trash, please. Just cause you run it, don't mean you own it. Know what I mean? An IncomeLux.com lesson. The basics of companies is super simple. If you understand these equations, you know everything except the tiny details. Assets minus debts, aka liabilities, equals equity, company's net worth. Similar to, but not exactly, the company's current value, so you want it to trend upwards over time. Assets minus equity equals debts, liabilities. You'd rather this be lower as a percentage of assets for stability. Equity plus debts, liabilities, equals assets. All assets are paid for by those two options. Sales minus costs equals profit, or loss if you're bad at your job. Ultimately, profits will eventually be required. Cash flow inflows minus outflows equals net cash flow. You really want a positive number, or they might not make monthly payments someday. If there was anything you need to truly understand, it's these simple equations. What you want is simple. Let's go over it. You want a company that builds assets using equity from reinvested profits, not debts. If a company can only generate value using debt, it's trash. You want a company that generates profits and avoids losses. This is obvious. You want a company that generates positive cash flows from operations and investing. You want a company that can easily handle any financing outflows. Once you can understand these basic principles, you can get the rest of this easily. Let's go over the actual financial statement concepts and balance sheet. After that, we'll go over a bunch of ratios you can actually use to determine which soup you should eat and which soup you should flush. Then we'll determine how you can design a score system to accelerate how quickly you can flush the poop. There's 3 parts to these company statements. The balance sheet handles assets, debts, and equity. The income statement handles sales, costs, and profit or loss. The cash flow statement handles inflows and outflows. Let's get it going. Moving on, an IncomeLux.com lesson summary. Companies aren't hard to read. Profitable, net positive cash flow, equity-driven companies are buys. Losing, net negative cash flow, debt-driven companies are shorts. Follow the trends, not the rumors. Learn to read financial statements. Learn to track trends. Positive economic bias. Find positive trends in rising stocks. Negative economic bias. Find negative trends in falling stocks. Thanks for using this free IncomeLux.com lesson on investment scams and avoiding fraud. This lesson is provided free of charge by IncomeLux.com. IncomeLux is a financial social club for those who want more. We introduce you to over 140 online income streams. We also provide 150 investment, finance, economic, and business lessons for social club and website members. Members get paid commissions for anyone they refer who buys a monthly, quarterly, or annual subscription. To learn more, join us at IncomeLux.com or school.com/IncomeLux.